Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors are retreating yet again on the consequences of bad public policy choices. First up today, Wall Street is in a major retreat. The S&P 500 is down 1.9% in afternoon trade. Bond yields are falling, oil prices are diving, and the gold price is down sharply as a risk-off mood envelops financial markets. Investors are realising that polarised politics are a recipe for fiscal inaction, and the Congressional Budget Office issued a report showing how dire administration policies will become. The US budget deficit is already as large as their GDP and similar to levels in World War II. They now say it will get twice as bad if current policy settings remain unchanged. It is mismanagement on an epic scale. These policies, however, have pumped up asset prices, and on that basis, the US household net worth is rising steadily. At least it was until today's retrenchment. And the Chicago Fed's National Activity Index shows that the rebound after the pandemic shutdowns has run its course and is settling in with only 60% of the March and April losses recovered. The rise of coronavirus infections in places that had hoped to be under control now, in both the US and in Europe, is threatening renewed lockdowns. The inability to lock down properly the first time seems to be unleashing ugly public policy choices. Markets are scared of what could come next. But in Asia, prospects don't seem so dire. In Taiwan, their export orders rose impressively in August, up more than 13% compared with the same month in 2019. And that builds on impressive June and July data. And in China, a senior central bank advisor says China's economic growth will accelerate to around 6% in the fourth quarter of this year, as life and production in most parts of the country have returned to normal. And he says that full normal will return in the first quarter of 2021. The US Treasury 10-year yield is down at 0.67% in a 3 basis points retreat. The price of gold will start today down a remarkable $38 to $1,918 an ounce, and a very unusual 2.2% fall. Gold is acting just like any other risk asset, which traditionally hasn't been its role. And silver is down a stunning 8.8%. Oil prices have taken a hard hit today too, and are now at $39 a barrel in the US, which is a full $2 lower, while the international price is also down sharply at $41 a barrel. And the Kiwi dollar is starting today sharply lower as well at 66.7 US cents, and a full 1 cent drop overnight. Against the Australian dollar, we're slightly lower at 92.4 Australian cents, and against the euro, we're down to 56.7 euro cents. That means our trade-weighted index has fallen to 69.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.